This Saturday, we have two interesting webinars only for you. At 11 a.m., we have Kodeeswari Women Only Webinar, Investment Masterclass with Kodeeswari. And at 11 a.m., we also have an Corporate India What Q1 FY26 Earnings Tell Us About the Road Ahead by Mr. Sendil and Mr. Gaurav. What are you waiting for? Please register today.
In this video, I'm going to talk about how we use asset allocation to deliver good results. So we're going to study one of our PMS products, which is Sphere, a multi-asset product, where we've been able to use asset allocation to the advantage of investors. If you'd like to know more about Sphere, you can always write to us on WhatsApp at 9500027285 and we'll be able to answer a lot of your questions there. When we built Sphere, we understood what an investor really wanted. When we try to understand what this is, a lot of investors want equity-like returns without equity-like experience. This means you don't want to deal with the drawdowns that a pure equity index could give you. You also want to experience the kind of upside that equity can give you. So most investors understand that in the long run, equity gives you the best kind of compounding results, and many investors want to participate in equity. However, when they experience the drawdowns that an equity portfolio has, their tendency to contribute or to compound their wealth through that tough phase actually reduces. And that can be a wealth destroyer. So we curated a product where we were able to marry the returns that equity could give with lower volatility. And we did this through asset allocation. Now, I'm going to share some data in terms of our drawdown metrics, which shows you how we fare against an equity index like the Nifty. So when we look at how Sphere performed during this drawdown phase, we see that Sphere lost anywhere between 10 to 11% in their peak to drawdown. At the same time, the Nifty drawdown was close to 12 to 16%. So clearly, somebody who had a large cap quality equity allocation tended to have a deeper drawdown than a multi-asset portfolio. Now, this is very important in terms of experience, because when you experience good investing, when you experience more stable investing, your confidence grows, your ability to contribute grows, and that actually also helps compound your wealth through the long run. The second thing that we understood for investors is that chasing returns compromises them. This essentially means that if you have an asset class that performs in a particular year and you don't participate in that asset class, let's call it asset class A, and then in the following year, you say that, okay, let me buy A because it's done well in the past few years. And then you participate in asset class A, but in the following year, asset class A isn't the best performer, it's actually asset class B, and so on and so forth. So if you start chasing last year's winners, you're actually destroying some performance that you could earn. And I'd like to share a small data point from Bandhan Mutual Fund, where they've published how performance chasing can actually draw down on your returns. And you see there's almost a 1% compounded difference between a performance chasing strategy versus an equal weight strategy. So if you were able to do a more contextual strategy, your performance can actually be even better. So how do we do this at Sphere? We follow a contrarian and a value framework, which essentially means that we're early to the party, we're always thinking about the downside, and this means you get a much better experience in terms of what you can capture on the upside and how smooth your ride is. The last thing we observed is that most investors want a flavor of everything. So we've seen investors who've got some money in mutual funds, they've got some investments in ETFs, they have a hobby of investing in stocks, they have some investments globally positioned, and then there is FDs, gold, and all of these other asset classes that are a little bit all over the place. So when a portfolio is constructed in this kind of manner, it becomes very hard to measure decisions and see what the outcome is. Whereas in a multi-asset product, you can condense all of your decisions into one line item in your balance sheet. It's much easier to measure and you get a flavor of everything. So Sphere is able to marry sophistication with simplicity, and that is exactly what works for an investor like you. If you would like to experience a product like Sphere, do reach out to us on WhatsApp at 9500027285, or if you have more questions for us, you can leave them in the comments below.